All right, so we're looking at the stocks in the tech sector, and right away, what I'm looking at here is the dividend, which is really important to us. And as we see here, Seagate just blows the rest of the guys out of the water. Um, Next closest is Qualcomm. So it'll be really hard to get away from that 7% dividend. I don't think Seagate is ready to fall um, anytime soon. It performed really well when the rest of the sector didn't. So that gives me some confidence in running with this right now. This is Seagate here. This is the rest of the guys past month. Um, and so it's performed well. On average, it's not the best performer. That's Hewlett Packard. Um, I will look at maybe Hewlett Packard coming back the strongest um, for the rest of the month. Of course, I'll have to do a bit more research on exactly what's going on with the company right now to make that decision. But looks like just from here, Hewlett Packard, Intel has a good chance of making a bit of a comeback. I'm going to bet as of right now that 3.5% drop was just a lot of selling out of this thing. Qualcomm, as you see, has actually performed just a bit better. Let me see, 960 and ACA, yeah. So Qualcomm has performed a bit better than Intel. So I'll look at what's going on with those companies to see exactly what, if anything, could cause them to bounce a bit higher than the rest of the guys this past month, and go with there. Go from there. So anyway, long story short, we're gonna stay in Seagate. Let's take a quick look at some other things here. PE ratio 14, Hewlett Packard 14, Intel 15. So it's a bit cheaper. It's actually that's supposed to be it's way down. This is the difference in the PE ratio and the average. On the average, the PE ratio is 32, and right now it's 14. So what that means is that this thing has been much higher, and so it has that much higher to go. Um, Compare that to Qualcomm here, which has an average PE of 16, and now this thing is sitting at 40. That lets us know that this thing has ran up a whole lot, and so it's really expensive relative to itself. MXIM is a company I don't know a whole lot about. Looks like they've come back some. Let's take a look. I don't know if I have them. Um, Here we go. Yeah, not bad. So maybe I'll take a look at MXIM too and just kind of see what's going on there as well. But again, that's for short-term trading, and so long-term, we're just looking at what we want to be in for the long term. Net profit looks like Texas Instruments, Intel, MXIM, Microsoft have really been pulling in lots of money. Something tells me that's going to be services. Texas Instruments honestly doesn't do a lot of services, so I'm surprised to see that number. Um, Operating margins, again, some of these are going to be different industries, so they're going to be a little different. But as you see, Seagate really running slim margins, and that may have something to do with this big drop in price to earnings. So that's something that gives us a little bit of pause. But again, um, you haven't seen any bad numbers. Everything looks up so far. Return on assets is decent. Uh, Cash per share is pretty good. Cash to debt, I love that. That is beautiful. Um, this is the short interest. And this is what causes Seagate to go up so much, is that short interest. I'm going to take a quick look at L Brands and see what their short interest is. I have a feeling it's super high too. So I did do a little bit of research, and it appears that um, the entire retail industry has seen a lot of gains in the stock prices based on holiday spending, which makes sense. You know, it's that time of year. But people are saying that the holiday spending is much better this year compared to previous years. It's not something I've heard a whole lot about, uh, but I can believe it. I mean, our economy is doing really well. The unemployment numbers are low, so people are out spending money. So L Brand short interest, it is 6%. So it's not as high. It's not as high. Best Buy is super high, which makes a lot of sense. That's the reason why that thing runs so much. But 6% is high compared to the rest of the market, which I'm thinking stays at about 1 to 2%. So that says a lot. Okay, let's get rid of those now, and let's take a look at some other numbers here. Right. All right, now I'm gonna pay close attention to the beta and also the return and volatility. So Microsoft has the best beta. That's going to give us the most protection, and it also has the best return. And the volatility is fairly low on this thing. That's about average, I'd say. Let's take a look at what the average actually is. Yeah, the average is 12%, so it's a little below average. So that's good. And let's take a look. The up move is one of the highest. Down move is respectable. And our alpha is also really good. So I'm going to bet on Microsoft popping. This thing looks good to me. And the PE is not too crazy. Compared to the rest of the sector, I mean, average is 15%, so it's not too crazy. And so I'm going to look for Microsoft to pop this month. All right, but we're gonna stay in Seagate a little bit longer, see where things go. I do expect the technology sector to cool off quite a bit, especially because it looks like the market is leaning more towards beta plays. So we're gonna give it a wait and see approach. Let me look again. The best beta is Microsoft. So, hmm, that dividend though, that's the reason why it doesn't show up on our portfolios. Um, yeah, that's why it's not been an MVP because of that dividend. Um, so we can't do it. But again, I am looking for that one to pop this month. All right, that's it for tonight. I will see you next month.